You're welcome, dog. 30-minute, 1 hour, 4 hour daily. So that's alpha right there. No time frame under 30. You're welcome. Anna says the ABCD is a great one for momentum traders. Ross Cameron uses it a lot. Okay, okay. It's good to hear. That's good to hear. I think I heard of that dude. He's on YouTube, right? Lives in like Thailand or something. Hey bro, would you mind sharing it? Adam's over here begging. Adam's over here begging, bro. Begging for the scraps. It's all good, dude. I'm just glad you're here. Interesting. So it says to use the Fibonacci tool. Fibonacci tool to measure A to B, then move to C to D. All right, let's move on. I do want to look into this. Perfect question. And that book you're reading, Volume Profile, The Insider's Guide to Trading by Trader Dale, is one of the best introductions to this subject. Let's go deep. But I'll break it down cleanly so you get both the trader's perspective and the automation quant challenge side. This is because Rico said it's hard to automate, so I'm very curious. Okay. Volume profile actually is, at its core, volume profile is a tool that shows where volume occurred, not when. Traditional volume indicators like the volume bars under a candlestick chart tell you how much volume happened per bar, per unit of time. Volume profile, however, shows you how much volume happened at each price level across a chosen range. Think of it like this: instead of asking how much traded this minute, you're asking how much traded at 38,000. The output is usually a histogram on the y axis of your chart, showing high volume nodes, HVMs, high volume nodes, prices where lots of transactions happen, fair value zones, low volume nodes, LVNs, price where very little happened, imbalance zones, breakout potential, point of control, the single price level with the most traded volume, the magnet of price. Why manual traders love it. Manual or discretionary hand traders love volume profile because it provides context that price alone doesn't show. Here's why. It visually shows value and acceptance zones. Price moves fast through low volume areas and stalls in high volume areas. That gives you natural support slash resistance levels, not based on arbitrary moving averages, but based on where real volume or real market participants transact heavily. It aligns with market auction theory, market seek balance. Volume profile shows you where the market agreed on value and where it didn't. Manual traders can read this contextually. For example, when price leaves a high volume area, they know it's exploring for a new fair value. It adapts dynamically to structure. Unlike static indicators, RSI, MACD, volume profile adapts to market structure, session by session or swing by swing. Humans are good at seeing patterns visually and deciding which part of the profile to focus on, like the session, the composite, the range breakout. So discretionary traders use to say things like, if price re-enters yesterday's value area, I'll fade it back to POC. Or if we reject at low volume node, I'll trade continuation